So today we're going to make a short video on the interest rates in construction and how they affect contractors and subcontractors alike. The foundation of a healthy economy relies very much on interest rates, inflation and exchange rates. Interest rates and inflation are sort of regularly controlled and monitored and effectively aid healthy competition as well as regulate and govern the cost of living and working. Inflation rates are intertwined with interest rates. So as we see inflation rise, we'll also see interest rates mirror this in order to try to keep prices down. So although we've recently experienced a drop in inflation from 8.9% down to 7.8%, which was recorded in July, prior to this, we've been experiencing a sort of a 40-year high in inflation rates. Added to this, we've also seen a 13-year high in interest rates at 5%. So all of this obviously makes a very, very difficult operating environment for contractors and subcontractors alike. So all of this means that construction companies will have to tolerate a higher cost of operating. So if you run a contracting company or a subcontractor company, there's a few fundamentals that we're going to go through for you to either navigate or understand the current economic climate. So let's start with borrowing. As interest rates go up, the cost of borrowing inevitably goes up. As interest rates come down, the cost of borrowing comes down. So if you have a company that's fueled by borrowing, obviously the hike in interest rates is going to make running the business cost that much more. If you're well into a loan or any other kind of borrowing, you probably won't end out feeling the cost of interest or interest hikes or even experience them till you come to obviously the end of the loan or when you need to obviously re-borrow. So this is especially pertinent to those companies that rely on borrowing to operate. Borrowing inevitably leads to repayments. So if you're a sole trader or you're self-employed, unfortunately, you potentially get hit from both sides, from business borrowing to personal borrowing. And if you start to get behind on any sort of personal repayments, these can hamper obviously your ability to pay back suppliers and commit to projects. So keeping an eye on obviously your borrowing from a personal and a business perspective is really important to keep the cash flow of the business moving forward. Another thing to look out for when interest rates rise is the cost of materials and supplies. And an immediate reaction will be for the suppliers to obviously increase their prices. This may deter you from also increasing your prices, as you may feel that this might put off customers, but it's a necessity for you to maintain profitability. If you don't do this, then you're potentially also neglecting your overheads as well. So either your overheads become more disproportionately expensive or you neglect them, i.e. you're not reviewing trade credit accounts, staff wages and the like. So it's really important that as the cost of supplies go up, you also look at your costs and pricing accordingly. Interest rates may also affect a decline in projects, very much because the funds originally committed or earmarked for the projects may come at a higher cost and therefore clients may decide to put these on the back burner. Added with an increase in your overheads, which we just talked about, plus a decline in projects, obviously this can create a bit of a concern or a worry. With a negativity, there's always a positive. So one of the things this gives an ideal opportunity for you to do is to look at the efficiency of the business in terms of how lean it is and also to reduce waste. So it creates a great opportunity, even though these are worrying times. So whatever the situation, it is really important to act quickly and not ignore the warning signs. As part of obviously looking after the business, as well as avoiding the risk of any insolvency, one of the things contractors and subcontractors can do is to obviously look at their finance and restructure, give themselves more time to pay creditors, as well as sort of streamlining outgoings of the business. By recognising financial distress early, it gives you the opportunity to do the right thing by creditors, as well as recovering, so we see interest rates recover back to a reasonable level. If you find yourself in financial distress and it's all becoming too much, there's lots of support out there. There's lots of organisations that are there to provide support. There's also insolvency practitioners that will also can come in proactively to help out and try to rescue the business. So do seek help and support. So for smaller businesses, there's the Federation of Master Builders, the Chartered Institute of Building, the Royal Institute of Chartered Surveyors, all have good information out there for small businesses, subcontractors, in terms of managing your business and seeking help. So I hope you found value in this video. If you have any questions or want to know anything more about the subject, please do get in contact, and we really look forward to hearing from you.